Yeah, and again, briefly for those of you who are new to the fund, as John mentioned, it is definitely not a technology-only fund. It's an innovation fund. So the intention is to go, wherever we find the impact of the innovation is best rewarded. So there are 6 sectors at the moment covered in the portfolio, and we really can go anywhere, regardless of sector or geography, with a few small caveats on geography. It's very differentiated to a lot of other sort of global funds that you'll come across. We don't have a large cap bias, as John mentioned. We're really looking for beneficiaries of very specific innovations. So these tend to be more in the sort of mid-sized companies rather than the Amazons and the Microsofts of the world. So we don't have any of the Magnificent Seven, as they're called, on the portfolio at the moment, and we're unlikely to have. Valuation discipline is very important to us. As Mikhail said, we've worked and lived through various cycles in the market. It's always important to understand what you're paying for when you buy a stock. And when you're buying innovation, particularly, it's important to buy real companies, not science projects. So every company experiences something of a cycle, regardless of what they do, whether it's economic or just industry cycles. So if we're buying companies, we want them to be cash generative and have strong balance sheets and be profitable through that cycle. And we don't want to overpay. So valuation is very important. We'll talk a bit more about that later. Focus and conviction, 40 holdings. We can hold up to 40 stocks. We think that's the right sort of balance of some diversity, but also sufficient concentration to make each stock matter. And lastly, we are very different. It says highly active. That doesn't mean we trade a lot. That means we're very different from the benchmark and from our peer group. So 98% active share, we really have 2% crossover, if you like, with the benchmark. So very, very different.